foster entrepreneurship. That's what it's all about. And the way we foster entrepreneurship, we've got 2 or 3 legs to do that. One of them is the monthly meeting, where we have speakers come in and we start off with an hour of networking with advertisers and drinks, and then the speaker, we have panels or distinguished speakers. In the past, we've concentrated mostly on the telecommunications industry and the biotechnology industry, being here in San Diego. But this year, we've sort of gone beyond that. We've had people in petroleum, we've had the chancellor from UCSD come and speak to us, we had the former CEO of Apple come, and today we have something on social media entrepreneurship, so we'll talk about that in a few moments. I also want to mention our sponsors. We have Gary Rayner, who's a platinum sponsor. We have Qualcomm, who's a gold sponsor, and then we have ATS and Pacific companies. So I'd really like to thank our sponsors for that. A couple of announcements. First is we'll be having our holiday party on December 10th over here. We won't have a speaker, but it'll be sort of appetizers and drinks, and I believe it's about 2 or 3 hours. Just a wonderful time. Everyone can come, and we'd really love to have as many of you as possible to come over. In addition to that, I also want to talk about TiE, the Young Entrepreneurs event, which we're going to have. It's going to start on December 7th. I believe we are one of the only organizations that does this for high school students. Over a 4-month period, we have classes for them, then they get involved in a competition, and then the winners go to a national or an international competition. I believe it's in Vancouver, Canada this year. So it's really a great experience for high school students to learn about entrepreneurship. We've had parents who've come and told us that, we never had a chance like this, and we've had a lot of parents who actually sit over there and attend the session because they've never attended anything like this. So again, we're recruiting for students. If any of you have high school students who would like to attend TiE, please contact Preeti. You can look at our website and send in your application. We would love to have some of your children attend.
Please mention the duration, 6 months.
Yeah. The classes are about 4 months, then the competition. So the whole thing is almost 6 months. It's every alternate Saturdays from 9 to 12. It's at the La Jolla Community Center. And so I think it's really a wonderful thing. They get an opportunity to work in teams. They get an opportunity to listen to experts in different fields. They do a business plan. Then they have an opportunity to compete with the people in Orange County. And if they're the winners, then they get a chance to compete globally. I'd also like to acknowledge some of our charter members over here. These are the people who, I keep thinking of myself like a Robin Hood. I try and steal from the rich and give to worthy causes. And so these are the guys I steal from in an unashamed manner. Nikhil Varaya, Anil Kriplani, I don't think Jaya is here, Naresh Soni, Robert Kibble, who's going to be the moderator today, Kuram Sheikh, and Sam Srinivasu. So let's give a hand to all. Now, I'm going to just do a brief introduction. You read about, today it's going to be in social media entrepreneurship, and Robert Kibble will come and introduce all the speakers. I just want to introduce Robert Kibble. He's the founder and managing partner of Mission Ventures, which is one of the leading venture capital companies in the city that does IT. They're focused on Southern California, and he's had 30 years of experience in venture capital. He's had a BA from Oxford, an MBA from Darden School at the University of Virginia. Some of his past investments are Sandpiper Networks, Shopzilla, current investments, Iveco, I'm sorry, Robert, if I'm not pronouncing it correctly, NextHint, and SodaHead. So with that, I'm going to ask Robert to come and introduce the panel, and I'd like to welcome the panel to come over here, please.
thank you very much. Thanks. So, on my immediate right is Greg Kostello. He's with BMX and has this wonderful website, Givit. Next to him is Rajiv. Rajiv is founder of, actually he's a serial entrepreneur. You can read from the bios, I think, which you have there, but he, of course, is the key founder with Rocketalk. And then we have Jason, who's the founder of a company called SodaHead. So without much more ado, I'm going to ask each of them to introduce themselves, but primarily just talking about their experience in social media. So, Greg?
Well, first of all, I want to thank you all for inviting me to be here. Every TiE event I've been to has been great because the people are super smart, gracious, and the food is the best. My experience with social media is I've been working with social media in one form or another for about 13 years. Most recently with our product, we are both a social app and an editing app, and we also leverage social media to promote our product. So what we do is we have Twitter and Facebook and other services integrated in, and we also advertise on those to promote our product.
That was really short. I thought Robert told us to do 3 minutes, but that's okay. So I'm Rajiv. Started Rocketalk about 5 years ago along with my wife. She's in the audience here, Amy. We started off as a very simple application where we said we will just introduce people to each other, and the people to each other was introduced through voice. The trick was to use voice. At that time, voice was very early. Voice, not making a voice call, but making a voice clip or sending a voice clip. So if I sent a voice clip to Anil, Anil could respond and say, hi, I'm here and I'm eating my dessert right now, or whatever he's doing at that time. So that was the way we started. But then it became a lot more social after that. So in the last 5 years, we've become a lot bigger in scale, larger in scale, and we are about 23 million users right now. A lot of them focused or concentrated in the South Asian market: India, Pakistan, Bangladesh, Sri Lanka, some in Indonesia, some in Philippines. So a lot of activity happens there, a lot of use cases, but I guess we'll get into that in a lot more detail as we go along in this panel. Thanks.
I'm Jason Feffer. Thank you for having us at the base tonight. Whenever I hear that, like, thank you, Paul, for when I was invited by Robert, I saw TIE and I click on the link and I see a bunch of Indian people and thousands of Indian engineers, or is it thousands of Indian entrepreneurs? I couldn't figure it out, so I looked a little further and I see a picture of Ashok Omitraj, who spoke at your event at the end of last year, I believe, for the annual event. Ashok was my first boss out of film school at USC.
Wow.
And so I had great appreciation for the Indian culture. He came from Madras. And so it wasn't just working with him that I learned about Bollywood, but also he had a house, employees who worked out of his house, that I spent lunch times with his house person, servant, and who just came straight out of Madras. And so he was practicing his English and I was learning how to eat curry. It was a great relationship that I could learn and appreciate the Indian culture. I think that really helped me later in my technology career because I ended up working with a lot of Indian people and Indian subcontractors or contractors. SodaHead founded in 2006, about 7 years ago. And that started, the genesis of it came while I was working at MySpace, which I was one of the co-creators. I'm user number 4 on MySpace. I was the one who named the company. I filled out the paperwork to do the DBA, and I've been in tech for a long time. In the 90s, I was writing Cold Fusion in 1995 at a company called Davidson and Associates. We made software for education. So for the website and such, I was writing Cold Fusion. I was always a film student and entertainer type person, not a techie. But I worked at another company called Activision after that, and then I went to .com in '99. And then so that was called Creative Planet. We raised a few $100 million without a business plan. It's the good old days. And we'll talk about that a little later. But then I went to go work at MySpace in 2002 when it was actually a previous company. And for a year we worked, and then we said we should do something different. Let's beat Friendster. What are we going to call it? And I came up with MySpace based on one of the domains we had already owned. And we launched it, and 100 million users later, I said, it's time for me to quit. I'm an entrepreneur. So I founded SodaHead as a place to discuss public opinion. And what SodaHead does is it's a website where we talk about public opinion anonymously so you don't lose all your friends. And you can talk about late-term abortion funding by the federal government or pro and college football, and you still have all your Facebook friends at the end of the day. And that spun off into a SaaS licensing business for cloud-based, where we enterprise solution for Fox News, LA Times, ESPN, a couple other smaller sites, where we power their polling technologies. And then we just launched another product for publishers to do-it-yourself polling, where we pay them money to use our product as an advertising. That's my story.
Okay, so according to Alexa, or according to this magazine I read, eBiz MBA, the 15 largest social networking sites, and I think they've got this wrong, and I'll tell you why in a moment, but are Facebook, Twitter, LinkedIn, Google+, Pinterest, Tumblr, Flickr, VK, Instagram, DeviantArt, MySpace, Cafe Mom, Tagged, Meetup, Liveborn, yes. And I think one or two of those probably you've never heard of. VK you probably don't know, it's in Europe.
Russia.
And these have millions and millions of users. In that list, the reason why I say, it all depends on what you can define as social media. Clearly Spotify's on that list. Is Spotify and Pandora social media companies? In a way, many people would say they are. Is YouTube in that list? No, it's not. And I think it should be. But Facebook, here are just some stats just to get your arms around or heads around, which are just amazing. Facebook and YouTube today have over 1 billion monthly average visitors. 86% of Facebook today is outside the USA. Twitter is smaller than Tumblr, WhatsApp, Live, and WeChat. And some of those companies you probably may not have heard of. More Indians than Americans use LinkedIn and Google Plus today, which is amazing. Have anybody heard of Qzone? Qzone in India is about the size of Twitter, LinkedIn, Google Plus combined, because it's in China. And the last amazing stat is that 87 million of internet users in China use Google, and it's banned in China. So that's sort of, I think, sort of interesting. And we'll get more into this in a second, but I just wanted to just give you a little bit of a sense of what the territory you're in. So now I'd like to ask each of these panelists just to succinctly tell us what, from their experience, a number of them have been in their companies a number of years now, what are the two takeaways that they would like to share with you from their experience that could be interesting or useful to you? So who would like to start?
Be happy to start. I think the first takeaway, especially around social, since that's the topic here, is that social isn't a destination. Social is what you bake into everything you do. If you don't have social as part of your feature set for your product, you're probably missing out. To give you an idea, originally we were not really a social app. We were very much about doing video editing and really focusing on individual use. When you turn on the social features, in 6 months, our usership grew about 400%. So we struggled, we went social, 400% growth. Okay? The social that you see in all these things, and Robert mentioned Spotify. You don't think of Spotify as a social network, but that's in fact what it is, because it's a big social through the entire music experience. And we look time and time again for social being embedded into what people are doing. We're working with another large company. And at first they were sort of saying, well, we're not really a social site. And I said, well, are you going to allow people on your site to interact? Yes. Are you going to allow them to be friends each other? Yes. Are you going to allow them to message each other? Yes. I'm going to allow them to promote each other? Yes. Well, you sound like a social site to me. And so I think the first takeaway is that social is what you need. But that also means another part, which is that just being a social site by itself is not enough. If you look again at Pinterest and some of the other examples, it's usually a specialty, a different thing you're doing. It's a value proposition to the consumer that they get right away. when you look at the evolution of Friendster to MySpace to Facebook to Instagram to Snapchat, in each case, you think that at one point the king owns the world. You think that these guys are dominating, going to own it. But in fact, what's happened is that they've created specialty versions, a different value proposition that it really threatens the guy who's in charge. So I would say you already see with Facebook, watch out. With Twitter, watch out. I think one thing you mentioned casually was WeChat. My wife is of Chinese descent, and WeChat is huge outside the United States. But it also has tendrils back to the United States because it allows for any expat to connect, people to connect across different groups. So I think the second takeaway is that social isn't enough, but you have an opportunity to do something with social that you would never have otherwise.
I'll add that while social is baked into everything and maybe not a destination by itself, except for a few sites that might be big enough to be a destination, that when you play with social, it's often not what you intended to be that you end up with, because the whole point of it is for users to take control of the content and the interactivity. So if you build a gaming platform and have a sharing image service, you end up being Flickr, and no one remembers that you were a gaming platform to begin with. At MySpace, we were a social place that ended up being a music place. So you have to be very careful to let your users take control, because once you have a network, they're your value. The value's in the network, not in your app. But you can't let them destroy your app and ruin the revenue stream by taking total control and total ownership away from you as a business. So you gotta be very careful when you're playing with social, that you want it there, but you gotta be quick to move, to follow where your users want to go to make a better product. But while you're letting them innovate and direct it, you also got to remember that they don't know what they want. So you have to listen to them, but guide them in the social area. Which makes it really fun, and why I enjoy it so much is that a lot of it just comes in from statistics of users and seeing what features they like. But the challenge is, I thought A, they want B, but really the answer is C. And so it's a fun space to play in.
I agree with what Jason just said. It reminds me of something that we went through where we gave up control for some period of time to our users. So we had this incredible platform, and this was in the early days where no one else had this platform where you could do video chat and you could send videos back and forth. Now you can imagine, and I won't get into the details, but a lot of people made misuse of that and had inappropriate content going. When you allow that to happen and they take charge, a lot of videos go through which might not be something that we may want to see here, or at least not in public anyway. So that was what happened for a while, and then we had to take it back from them, and we had to put in controls, very stringent controls, so that they could only do some things properly, but not these inappropriate things. So
yeah. What you said is so perfect, that at one time at MySpace, we started out as part of a public company, and that was our goal, to be a public company and something we could sell and be proud of and have an exit strategy. There was times where people said, why don't you guys just be a porn site and make a lot of money? Because that's where your users want to take it. That's what kind of pictures. So we said, no, our long-term strategy is this. We know they want to share pictures. We know they want that kind of angle on it. So we're going to bring it to the edge, let them go to the edge, but we got to content moderate so that we can make money and be a company that has an exit value. That's a great example for both our companies. You have to control. You let them go a certain distance, but you got to control it.
And the other learning, the other takeaway is, I think we as a company did not focus enough on the user experience. So initially, because it was new, and especially in that part of the world, in South Asia, it was brand new. So people came in hordes, people came in thousands, millions. But when it came to the point where Facebook was on the horizon, Google Plus was on the horizon, we were suddenly looking a little outdated, just from a user experience point of view, from the UI point of view. Our colors were outdated, our looks were outdated. It wasn't as if the functionality was outdated. The functionality was actually ahead of the game, but the looks were outdated. But that was so important because that's what people saw first. So I think the big takeaway for me was we should have focused on the user experience and just the look and feel even a lot earlier than we started doing.
I think it's one of the things you take out of this. It's so difficult to imagine just to sort of think, go to a room or go into the into your bath and have a brainstorming session with yourself as to what social media networking concept has not been tried and what might be successful. So many of them seem so strange in retrospect, and now we accept them. I mean, how many of us sort of complained at the idea of really wanting to share our experiences on Facebook? How many of us really thought that LinkedIn and this strange thing, get these wretched emails, you know, do you know someone who thinks you're great and this and that, and do you want to link with them? I mean, we all sort of scratched our heads, and now we kind of accept it and understand that it really does have some value. So I have a question for the panel. Snapchat, you might have seen, was offered $3 billion in cash by Facebook the other day, run by a 23-year-old Evan Spiegel. Apparently it's this sort of photos that are sent by teens to one another, and they disappear in a number of seconds and just disappear like that. It has a phenomenal number of users and phenomenal usage. And so I want to ask the panel, in their opinion, based upon their experience, was Facebook crazy to offer $3 billion for it? And secondly, was even Spiegel even crazier and out of his 23-year-old freaking mind not to have accepted it?
Well, okay, so the first thing is, I think that Facebook has to stay forever young, or they're screwed. So I think offering $3 billion, much like they bought Instagram, you're not going to make the next Instagram within Facebook. There's too much energy spent on monetizing the current platform, so they bought Instagram. And I think they were following the exact same pattern to look after Snapchat. I think the challenge, though, is even with Twitter, so I imagine all of you have watched the IPO for Twitter, and so when out, and all the institutional investors did great, but if you bought as a regular investor, you were sitting there flat to down since the purchase price. I think what people are waiting for is to see a monetization strategy. So if the guys at Snapchat have a brilliant monetization strategy they're not telling us about, then of course they should pass on it. If they don't,
They have a self-monetization. They make money.
I think maybe they're waiting for a bigger check, but I don't know. At $23 billion or so, it sounds pretty good.
Any other comments?
Well,
Insights?
I think it's not so simple. I think it's more of the fact that Facebook was losing its audience. Their audience was going away to Snapchat. It was a huge audience that was just on Snapchat and not spending time on Facebook. I think they had to take that away from Snapchat. So it was worth $3 billion only to Facebook. Maybe it wasn't worth $3 billion to anybody else. Maybe it wasn't even worth $1 billion to other people. But I think it was worth a lot of money to Facebook because their 100 billion valuation or wherever they are right now, that would go down to half if this continued to happen for the next few months.
I think that's an interesting point. I read that Facebook, according to some recent research that's being done, Facebook is losing teenagers.
To Twitter, Snapchat.
And so that's significant. On the other hand, listen to what I said about where most of the revenues come from. The rest of the world has got a long way to go to get saturated with Facebook. So I think they've got a lot of earnings potential still ahead of them for that reason alone. So let's move on to another company quickly. Kleiner Perkins is one of the most successful venture capital firms in Silicon Valley. I guess usually mention the same breath very often with Sequoia Capital. They have stayed pretty well out of social media, as I understand it, investments. They were not in Facebook, not in any of the well-known ones that I'm aware of that we think of. John Doerr, who's got this sort of stellar reputation, suddenly pounced recently and invested in Nextdoor. Does anybody know what Nextdoor does? Do you want to explain briefly what Nextdoor does? So at a $500 million valuation, I think with Tiger, they put in $60 million.
So it's a social network about connecting to your neighbors. And I think when we look at this, when I was growing up in a small town, I knew all my neighbors. I lived in Del Mar, and I know 2 of them, right? And it's not a big place, right? It's really, so you need some kind of connective tissue to get people together, because people are sitting oftentimes in their laptops, their very busy lives. I think the numbers are really amazing. It went from about 5,000 neighborhoods to 25,000 neighborhoods in a span of a year. Okay. So they clearly tapped into something. How do I find my neighbor down the way who I know I've like waved at a couple times to walk dogs, but would like to actually know so we could actually change up maybe doing some dog walking, things like that. How do you get to know them? How do you trust that they're who you're online with? So they figured this out in a way of making sure that you can believe your neighbors and then coordinate things. There's a lot of things we like to do with our neighbors physically. Another thing too is if you own a home, if you're in a permanent neighborhood, you have more money than the average person. So that's an environment, that's something to tap into. So I think it could replace all the newspapers in terms of connecting people together and looking for local services. So it is potentially a huge opportunity, and no one's cracked that nut so far. So
Yeah, it has a lot of revenue opportunity built in. Angie's List is the first thing that comes to mind.
Yep.
Content recommendation. Local advertising is huge and growing as the tools become better to target locally. So it's got a lot of that, and it's got a great exit opportunity in that any of the big media companies want to have, like you said, it replaces the newspaper. Newspaper subscriptions are going down. New York Times is mortgaging its building for all that kind of stuff. So imagine the online newspaper that is the local Gazette is next door, is the hope. So it's your classifieds, can it replace Craigslist, Angie List, those types of things. And you think, well, why doesn't Facebook just do it by saying neighborhood is a group and they already exist and then you just join it and therefore it's there. I think people have different sharing needs and privacy levels, and I want to share with my neighbors the fact that there was a break-in, but I don't want to share on Facebook that there was a break-in. Just my other friends that are professionally related to me don't care. So everything's got its niche, LinkedIn versus Facebook. So I think it's got a huge opportunity, and 60 million is nothing. 500 million valuation, they could sell that for money.
Rajiv, would you want to add anything to that?
Well, I think it's overvalued at this stage until it becomes a lot more, there are more data points, there are more proof points available. I haven't seen any proof points. I've seen these updates coming in. We are members of Nextdoor. I see these updates coming in, but it's all very, very mundane, very chatty stuff going in. Somebody has lost a dog, somebody lost a cat, or
That's what it's for. So the money isn't in the conversation, it's in the targeting of the audience.
I probably shouldn't be on this panel because I think it's crazy. I don't want to know my neighbors. I probably got some
Shotgun, right?
deep psychological problems. I'll go see a shrink after this. But it does bring us to the issue of valuations. So Twitter went public at, a few bill. Does it make any sense? Are we back into .com silly season? I mean, companies not making money.
Twitter's $24 billion valuation, which is basically LinkedIn. So I looked at very similar companies because I wanted to see, where does that fall? Okay, Facebook's higher. Where else does it meet? Oh, LinkedIn. Now, if you were an investor and you're thinking, okay, I'm going to invest in one of two companies, Twitter or Facebook. They have the same valuation, same market cap. Which one's going to do better? Where's my money going to grow? He said, well, Twitter has a lot of upside. It's in its infancy. They haven't started monetizing yet. But yet, it's already valued at where LinkedIn is that has tons of revenue. So can Twitter grow to the same revenue growth and then be worth more than LinkedIn? Because isn't LinkedIn already making a ton of money? LinkedIn's got $121 million in working capital compared to negative $21 million for Twitter. So you think, well, why don't I just buy LinkedIn? Because that's where Twitter's going to get to with its revenue and have zero growth in stock price market cap, because when it catches up to LinkedIn, LinkedIn will hopefully figure something else out and grow. So are we back in the silly days? Is Twitter reasonably priced? I believe in the free market. Everything is exactly priced properly. Someone bought it for that much. That's the only answer to how much something is worth. Would I invest in something like that? I wouldn't be a Twitter investor right now. But talking about the silly days, I love that phrase, silly days. I think you mean 1999, right?
I like that.
When I was at Creative Planet, we raised about $300 or $400 million and had air-on chairs and us on the 6th floor of Wilshire and Fairfax, basically looking out, trying to figure out what our business plan was. I wasn't the guy who raised the money. I was just part of the early team. And in 1999, the silliness wasn't that Pets.com was worth a lot of money because it was only worth $320 million. Twitter, $24 billion. So we're way more silly in terms of market valuation for companies now than Pets.com. $320 million, that's nothing compared to Nextdoor. So the valuations are way higher. But we are also past the point of the Wild West. We know what revenue models work and don't work. The markets are much more regulated today, Sarbanes-Oxley type things. People can't fudge numbers. We have GAAP in generally accepted accounting principles. A lot more, hey, if you're going to be worth $24 billion, or $5 billion, or $1 billion, there's many billion-dollar companies that are .coms today that you've never heard of. These people are doing it because they have revenue models. The investors are knowing what they're getting into. There's a lot of transparency. If you look at the silliness factor, in 1999, the average IPO had 139% growth in the first month. It's only about 39% now. So we're not as silly by just throwing money at .coms and hoping that we're going to double our money every month. But we are really high in the valuations. But I think, as I said, the market is exactly priced properly. People are willing to take those risks. They were in the .com silly days of 1999 because, hey, if you won and you were Google, which was 1999, 2000, and you invested in that company, imagine the upside. So there was a lot of upside in 1999. There's a lot of upside today, and we know what it is. So I think everything's reasonably priced.
Okay, so let's just turn just briefly, since we've talked about valuation perhaps almost enough already, but just quickly, let's just give your opinions on Pandora. Now, Pandora is this music site. We're all probably familiar with it. It's now moved up, believe it or not, to a $5 billion valuation. I don't think it makes money yet. It's got huge competition. It's got Spotify, which you probably all know about. It's got our little company called Slacker, which is here in San Diego. It also has companies like Apple that have now produced a music service, and clearly, Google's serious about the space too. So, does that make any sense?
So my background, I was head of technology for NPQ.com when I worked for Universal for a while. I would not invest in Pandora. The reality is, and so I don't know how many by show of hands have an iPhone. Okay, so great. So you may have noticed with the recent update, something called iRadio. So Apple waited, patiently for 7 years, 8 years, 9 years, and then came out with a product to compete with everybody who showed them how to do it. And then how much market share do they take away immediately? Spotify is there. All of these sites, though, have to pay licensing fees, and those licensing fees are really egregious, in my opinion, from the music industry, having worked there. So they have to pay this huge lump before they even see anything. Okay, that's really hazardous, and they don't have anything else to sell you, right? There's no other product that goes with this. It's easy to replicate. The music company would happy to license this to anybody else. I really do think that, unfortunately, because I was a huge fan of Pandora, I was an early user, I was one of the people that actually paid for the service, and still do. But as an investor, no, I think it's definitely a pass.
I tend to agree with that.
Yeah, it's tough to think of. It's already at $5 billion, and where it's going to go from there with all the competition being introduced now. I pay for Google Music and Amazon I get. It just seems like Groove Shark. I mean, Slacker I think is a great company. I have it installed on all my phones and services in my TV. So it's a crowded space. Who the winner's going to be? Maybe it's a few people, but I don't think there's much upside for one company at $5 billion.
Okay, so we've sort of touched at a high level certain things you're all familiar with and some of the controversy about the valuation, etc. Let's get down now to the key ingredients about what are the success factors for a social networking company. What are the commonalities between them? And what are the key characteristics they're trying to address? Maybe we touched on some of these already. And what are the key attributes for operating a business in this space? Based upon your experience, what would you say?
Lots of venture capital. With a great board member. And I'm partially joking, but there's a lot of seriousness to that, because you think of who did we talk to on that list? Twitter. How much revenue does it generate that it operates from? Facebook. How much revenue did Facebook generate to operate from in its early days? YouTube. If you go through the list of companies and how much money they made to operate on, they grew off of tens of millions of dollars of investments from venture capital. They had to build a network to sustain its future income, and some of these don't even have income yet to sustain themselves. They're based on capital and investment money. And so there's a lot of seriousness. If you're going to build a social network, the three of us probably could all tell you that without a long runway, it won't happen. It doesn't happen in a dorm room by itself. Zuckerberg took money, right? A lot of investment capital. So you need a long runway, one thing, and there's a bunch of other ingredients, but I'll hand off at that point.
Well, yeah, I agree with the money part. We definitely need a lot of money and a lot of runway. But beyond that, I think the main thing, there are these two fundamental axes if you take the vertical and the horizontal. I'm an engineer at heart, so maybe explaining it in a more esoteric way. There's the longevity axis where will people come in and keep coming in? You've got to figure that out. You've got to figure out what will make people come in over and over. Why is your service important? Why is whatever you're doing in the social area important enough to them? Why is it part of their daily lives? If you can figure that out, then you've got at least a service that people will come to over and over. And then the second axis, the vertical axis, if you will, is the popularity. How do you get it to be popular? I mean, you can have a service that is very important to people, but if only 100 people use it, it's not very effective. I mean, it's not effective from a monetization perspective. How do you get it to hundreds of millions of users and have a large percentage of those hundreds of millions of users keep coming back over and over, be sticky into the service? I think that is the magic formula. It's not really magic. As long as you listen to the users, that is what we did. We kept on listening. We kept our ears and eyes open. And users told us, and sometimes they were blunt about it, sometimes they were shy about it, sometimes they would beat us up. But ultimately, they got heard, and we ended up doing all the right things to continue to operate and continue to become this service that people come back to over and over. That's my take.
So I agree with both of your main points. I'd like to add to that. There was at a panel, it was a demo 2012, and they had the key VC for Instagram. And he was on the panel, and he said, well, why was Instagram successful versus all the others? And you know what he said? He said, you don't know. He said, I think it was sort of like a puzzle, because other photo services had friends, and they had sharing, and they had other things. But Instagram has something in particular. It was the combination of all those. And what happened is the entrepreneurs for that had been part of another social platform that had failed. But in the failure, they discovered that almost all the social services people cared about really led to one thing: photos. So their initial plan was to do this whole big sort of copy of Facebook, and then they just went photos. And so they did photos, and they did social, they gave it away, and then it just grew like crazy. But had they not had those failures and experiments along the way, in the previous sort of business, then they would have not had Instagram.
What Greg said, I think, points to the team. That was one of my ingredients I was thinking of, was team. That they've been there, done that. You need, I was talking to Karen here in the audience about matchmaking between a tech person and a marketing person, and I think it was Bruce, we're talking about that, and how important that is. That at MySpace, we had tech geeks that knew inside and out how to code in every different language there was, and then we had marketing people like Tom who knew what users wanted. And because we had that team of a lot of people when we launched, we were able to build quickly, compete with the competitors, monetize it, operations, content, user support. We knew what we were doing because we had worked together for at least a year, and some of them at several companies together. The chemistry was there. We could trust each other. We knew what to delegate to each other. It's really key, important ingredient is team.
Team and a willingness to experiment, try lots of things. You're going to have a lot of failures.
A/B testing. You think you know what you want. The audience thinks they know what they want, and that's why A, B, no, it's C. It's always just go straight to C and save you a lot of time.
Maybe I can just make a summarizing comment or observation. I think that obviously what you're looking for is sustainability of revenues ultimately, but certainly sustainability of traffic. And a lot of these companies, if they get to a certain level of unique visitors per month, it's just not high enough. You can never monetize enough, not on a sufficient scale to get the advertising dollars. As advertising is your key, and if it's not, if it's subscriptions, you're much the same. So you've got to get to a very, very high level in order to be able to monetize. And the thing, I remember one of the first deals I looked at when I got in the venture business was a company up in Seattle trying to sell and develop a magazine for youth. In fact, I think it was called Young Athlete. And the mistake that's come, and we didn't invest in it, but I did a lot of work in trying to figure out whether to invest in it. The mistake they made, and it was really covered up because they had quite a bit of venture capital money. They did all these promotions, and as a result of the promotions, the circulation kept on increasing. But the key was, did people renew? And just the same with social networking sites. What is the drop-off? Do you have sustainability among your audience? Do they keep on coming back every month? Or do you, because of the nature of the network, it's just a sort of fad, people try it for a while. What grabs them and holds them to the site ultimately? And at the end of the day, you need to cut away those marketing dollars to a large extent, and it should run in itself just via viral momentum. And I think that both VCs and entrepreneurs often make that mistake of not understanding that there is a point where this has just got to stand on its own. It's like bringing up a child. They've got to get through adolescence, and they've got to be an adult and have wings, as it were, of their own. And I think that's of critical importance to sort of be aware of that when you're investing in or you're part of one of these social networking sites. So does anybody have any comment about the range of business models? I've mentioned subscription, I've mentioned advertising. Whether Rajiv, you have any comment about where you can see these business models evolving?
So we've experimented with a bunch of them. The simple ones, obviously, as everybody has been trying here, the advertising ones. And we were unfortunately in a market that's a lot lower in terms of just pure CPMs. If you take CPMs here at, I don't know, $5, it's about 50 cents there. So it's like that. But in terms of the model, it works. Because if we have a lower cost model and if we have enough revenues, that business model works for that market. So that's the advertising side. And I'm sure it works here. And I don't know enough about the business models here on advertising. Maybe you guys can talk about it. But on the subscription side, we tried some nice models. We are a network where people meet other people. And one of the first things that people told us was, how can I get featured on your network? We had this spot called featured users, where we would say, we'll highlight that user, and people were willing to pay for it. We started experimenting with that, and we're still experimenting to some degree on that, where people are willing to say, I'll pay $1 per day that I'm featured there. Now, if there's enough scale in that, if there's 1 million people in a month wanting to be featured, well, you've got $1 million coming in. So that's something we have experimented. We think that works. We're just about to go further in that model and see whether we can take it to the next level of scaling up. So it's subscription in a way, but it's users subscribing to a service. And then of course there's the in-app purchase model, where a lot of companies are doing the in-app purchase. I think Givit does some of that. You can talk more about that, the in-app purchase model, where it's a freemium service, and then you price some of your features or some of your services with some money that you have attached to that. I'll let you talk more about the in-app.
So I think it's brilliant, and I think the reason why people are willing to pay is they pay for status. What's the difference between a t-shirt that has Nike on it and a t-shirt that doesn't have Nike on it? It's oftentimes $15 or $20. It's the same shirt. And so when you get featured on your site, you're elevating the status of that person, and people all the time pay for status. So it makes complete sense to me why you do that. You see that on Twitter. In fact, Twitter has two things. It has promoted accounts and promoted tweets. You would pay for your promoted account. You appear at the top left side on the web page, and then people are enticed to go ahead and follow you. And people paid millions of dollars for those spots. So we know that model works. If you want to see what drives people's behavior, status has a lot to do with it, and that's what drives a lot of social networking behavior. We do in-app purchases right now, and it's really about, we looked at a model, we looked at all the different apps out there that are around video, and the two top sellers are iMovie and VideoStar. Biggest Start is it targets 13 to 17-year-old girls. Allows them to think of sort of like MTV-like music videos. It's highly successful. They sell special effects that, again, you'd only love it if you like MTV in the 80s. But these girls love it, and they pay for it, and they're loyal. And so in-app purchases, if you don't have a model which really says advertising, or you're too early for advertising, many times you are, it just doesn't fit, or you are too early, nothing like getting a few bucks from somebody. If you think about CPMs as cost per 1,000, right? And if you're talking about 50 cents cost per 1,000, it's 1,000 impressions before you equal one payment. So, or maybe in this case, only 2,000 or 3,000 impressions. It's hard to get 2,000 or 3,000 good impressions. So in-app purchases have been the growth. We look in the market, that's where a lot of the growth is in mobile. So it makes sense if you can have a model which allows for that.
Yeah, I think it's interesting that you figured out that $1 per day if you have 1 million people. And what you'll see, you always got to think about the long term. So sometimes money falls in your lap and you just want more of it. But when you do that, you end up maybe hurting your long-term value. Like if MySpace went after porn, right? We could have easily done that because the money was there. But we said no because we wanted a long-term higher value. So something I might warn Rajiv about is that if people know that they can get featured for $1, then the status, which I think Greg's absolutely right about people pay for status, there's no status if everyone can pay $1 to get featured. So you have to be careful about not selling it out completely, that there is some real organic users that should be featured and some are paid. And so you got to balance that. And Twitter does that, or should.
They put a little thing that says sponsored.
Right.
Everybody will see it.
But I think what the audience and we have learned is that it's not just one thing. Don't just like, I'm going to build my business around selling phones and that's going to be it if you're a social network. Or I'm going to advertise, or I'm going to sell subscriptions. You've got to be creative. SodaHead, we set out to sell based on advertising because I knew that really well. I'd served over 1 trillion ads in my life, literally. Actually about 2 trillion ads if I counted them. And I thought I knew ad business very well. So in 2006-07, as we launched SodaHead, okay, if we get to 3 million unique users, we'll be able to sell CPMs at a high enough rate that with 3 million unique users, we'll make enough money. Well, then it changed to 4 million. Then it changed to 5. Then it changed to 7 million. And as we kept hitting those plateaus, the entire industry of online advertising was changing and shrinking, or consolidating, not shrinking, but consolidating, and now it's very automated. So advertising business now is run by computers often, the RTB, real-time bidding, SSP, supply-side platforms, and there's all these different computers that are taking out the decision-making of where to spend ad dollars. It's now being automated. So, and the CPMs, because they're bidding down there's tons of inventory. It's hard to build a social network just on advertising alone. I'd suggest people diversify, which is what SodaHead did. We went after the enterprise license business and advertising, but instead of on our site only, we're now doing advertising on third-party sites by offering them tools in exchange for inventory. So it's good to diversify and find creative ways, but also always think about the long term, especially if you have investors that want to exit.
I would say also something about advertising. So both as have done a lot of advertising as well, and as purchased advertising. I think the advertising market is going to change dramatically. So I had the chance of working with Facebook over the last 9 months, and in that time we used to advertise on different social networks, Flurry and Tapjoy and others, and we ended up spending no money anywhere but Facebook because Facebook allowed us to do ABN testing. Everybody's familiar with ABN. ABN is just that you can have multiple different segments you can target at one time. But our N was 800 at a day. I could actually segment down to spending a few dollars per segment per day. And I could leverage the social graph. So everybody's familiar with the social graph. I can know, I want to target, because we're focused a lot on creating videos, skateboarders in the Midwest who have been online in the last week, who have a modern iPhone. I mean, it was like, this checklist was crazy. And then I could try 5 different images and 20 permutations of copy in a given day. No one else gave us that kind of control. which is why I ended up buying Facebook stock about 6 months ago. It's full disclosure, because I saw what they could do. And if you see their mobile ad revenue is now accounts for 40% from zero, 40% of all their revenue in 1 year. So when you think about that opportunity, and where other people are still sitting behind with, here you can do so many impressions, I think that Facebook has a huge advantage over others in terms of figuring out how to target. If they put that with their other properties, like Instagram and others, you're going to have a lead that is going to be very hard for other people to pass. And they have the inventory.
But I think the part of Facebook that's very important in your testing or your success is not just the ABN, but the big data. And so, as I said, I think it's not just going to be Facebook. Sorry, Greg, but maybe you should short. I don't know.
Still happy to do
Big data is top of everyone's tongue now, top of mind. They're having conferences just on big data, and with all the computerized now bidding platforms and publishers being part of this, that you can retarget to someone. I read something that if you want to reach a Republican, you buy the keyword hot tub. You would think that it'd be Democrats, right? But really, if it's an election cycle and you want to target your audience, you go after the word hot tub, because big data has proven that people interested in hot tubs are suburban, affluent adults that want that near-home recreational experience.
So I want to change that conversation a little bit here.
We are non-political.
TiE is a very, very conservative organization. So, okay, we've managed to get some money to start our social networking site. And I might say today, I would say the venture capital community is very reluctant in general to invest in a startup social networking site. Witness the fact that, as I mentioned earlier, Kleiner Perkins invested a $500 million valuation with so many 20,000 or so communities already adopting Nextdoor. And the reason is because you really don't know what's going to work. And it's very much experimentation. It's very much being key to seeing what works and what doesn't. And as soon as you see something working and your users are telling you, this is what we're interested in, we're not interested in all that other stuff, we're interested in these features, then you want to put fuel on the flames. And that's when the VCs tend to come in. So otherwise, I think it's friends and family. The good news is it doesn't take a lot of money to start one of these companies. Start these ideas, or it's going to an angel group, etc. But what happens if it doesn't work? You get to a certain level of uniques, and it sort of peters out. Then we've got the issue of this famous word that's coming to vogue nowadays called pivoting. So you've got to pivot your business. So I happen to know how all three of these companies have pivoted. So maybe we could start out with Jason and then Greg, and then I'm going to ask Rajiv. And since I'm on Rajiv's board, only actually for the last 3 months, I want to ask him to do a little bit of advertisement and get you excited about how he's pivoted, because I'm excited, and I want you to be excited. Okay, Jason.
Pivoting is really important because, especially in social networks where you let your users and the network be the value, you have to cater to them in a large degree. I think if you talk to the originators of Twitter and Flickr, and a bunch of companies, they're all different now than what they expected. And the opportunity to make money is also very different than just advertising, as that industry's changing. So you have two forces that are working against you, which is the ad business is changing for social networks, and the users are wanting something innovative that isn't yet thought of, and you can't think of it until you're there. So you have all these things working against you. You've got to be able to pivot, which means this was our business plan, but now it's this. And some people talk about totally scrapping, like Flickr. They were a video game, and then they became just an image sharing, and they pivoted completely. I think now, I don't know what the word is. Maybe I could coin one here if anybody has any suggestions. But it's pivot tabling, where you have
Segu.
Segway.
Segu, yeah. Segu.
Segu. Yeah, changing your mind. That would be forever etched in people's memories as something to coin. Change your mind. So we're going to change our mind, but really it's not changing completely. It's adding. So we're going to incrementally add revenue streams. So we added a licensing business because we were really good at pulling technologies. So when a big media company wanted it, we said, we can build it for you. And we white labeled it, and we do it for ESPN, LA Times, Fox News, and you never seen our product. It's not a social network. It's our technology that they wanted and our professional services that we're able to service them with polling technologies because that's what we're really good at. And then we added on, as we learned that, there's only a certain handful of large media companies that are willing to pay these large licensing fees. So we want to continue catering to that line, but we want to go faster, grow our business more. So we're going to pivot, change our minds, segue, pivot table, whatever, off to this other business, which is now creating inventory on third-party sites for advertising by giving them our technology for free. So long tail, do it yourself. So it's important if you're going to be in the social network space to be able to quickly adapt new business lines as the landscapes change. I think it was Greg, and then Rajiv's going to get us.
Okay, well, I'll be brief because I really want to hear Rajiv's story.
You pivoted twice.
Pivoted twice. So when YouTube came out, you may or may not know this, but there was about 20 other video sites. We were one of them. And we had built all this infrastructure. We were actually growing. And then we're growing. And also we saw this thing where we weren't growing anymore. And YouTube was growing exponentially, I think, like every week. And I was talking to reporters, and they used to say, wow, this is great what you guys are doing. And then they said, but how are you different from YouTube? And at that point, I pretty much had the clue that we were not going to win. So I talked to Robert, who was on our board at the time, and I said, look, we built this whole infrastructure. We can sell this to enterprises. Everybody else is going to need this, and they're not going to just give this free traffic to YouTube. And so we actually did do the pivot. We made a SaaS model out of all of our infrastructure. And at one time, we had all these media companies. We had about 500 customers who were using our platform. Unfortunately, everybody else all the other VCs were like Robert said, this was a really good idea, and so we ended up with about another 20 competitors in this space. And everybody was willing to fund their company to undermine and not be profitable. So unfortunately, one thing you learn from that was, if you pivot into a space, look around to see if you're going to be commoditized. If you're got a good chance of being commoditized, like Amazon, in the enterprise space, you will be commoditized. It's a really good idea. So you better have something, a very unique value proposition that's defensible. If you don't, it's going to be really hard. So we figured out, one of our best customers was a company called Pure Digital, who made the flip camera. Everybody familiar with the flip camera? Well, our company did all the back end for flip. So whenever you shared a video with flip, and some of you probably have, that was going through our system. At one point, we managed 23 million videos in the cloud for them, 750 terabytes. That's a crazy amount of content, short form. And then one day, after Cisco bought them, they were making a ton of money. We were actually huge profit margins. They decided to kill the product. So that was 60% of our revenue one day. Lost that as what we're having, and margins were great. So they called me up and said, Greg, we love you guys. You did a great job. We'll pay you 20 cents on the dollar for all your service, and we're going to wind this thing down. And I said, that's okay. I'm going to talk to my board, and we're going to cut it tomorrow so we can save you money. They go, you can't do that. we have a 1.5-year contract with all these people. We promised them the service will run for the next 1.5 years. I said, sorry. I said, can you pay me more than 10 cents on the dollar? And they said, yes, we will pay you full pay for the next 2 years. That was after 3 or 4 months of haggling, because Cisco doesn't just roll over. So they actually paid us to pivot to our new business. And our new business was, what we realized was the big problem that Flip had solved, which was making it easy to do video capture. All of you have smartphones. How easy is it to do video capture? It's easy. So their model was going to get killed anyway. But what they did is we said the biggest problem for any of you who created videos is actually making a good video. Because most of the videos we shoot are really boring, right? So we made it super simple to create videos just by tapping on a phone. Yeah, so the point is that we pivoted again. We've gotten really good traction. We've got a lot of interest from what we're doing. I think I did this third pivot, which is the charm. And the trick is having enough money to last through these pivots.
The third pivot's the charm. You heard that. We're on our third pivot.
Yay.
So our life started off in the feature phone world. I mean, this is 2008, late 2008, early 2009. It was the feature phone world. So we grew up on the feature phones, especially in South Asia. So when the smartphones came in, we didn't take any action because we were very complacent. And I'm giving just a backdrop of why we had to pivot. We were very complacent because we had these millions of users having fun, coming in day after day, new users coming in, so we were very happy. But then last 8 months, maybe 10 months ago, we saw the writing on the wall that these smartphones are here to stay, and especially smartphones that were $100 or $120 or $150, they were there to stay. And they were taking away our business because we didn't have anything on the smartphones. Well, we had something, but it wasn't good enough. It wasn't really the right thing for that audience. So we had to figure out quickly what should we do to hold that audience that was changing or transitioning from the feature phone world to the smartphone world. And it couldn't be whatever we were doing earlier. What we were doing earlier was a full-scale social network with voice being the leading enabler, where you had voice-based communities, you could sing in your voice, you could have poetry exchange in your voice, you had all this great stuff. But that wasn't very applicable to the smartphone world, not directly anyway. So we had to think of a way to get this done. And what we came up with is, you'll meet people still. So our original thing is still meeting people, but you'll meet people through shared interests. Now we had to come up with quick ways of finding out what those interests were, what are the various verticals, whether your interest is music, but within music, what is it? If your interest is food, within food, what is it? And so on. So there's various categories and you have various interests in that. So I cannot claim that we are done. We are in the process of being done, or we're in the process of getting there and testing the market. It seems to be working so far. It seems to be at a point where people are creating that content based on their interests. So if people like hiking, they're creating content in hiking. If people like food, they're creating these recipes. If people are great fashionistas, they're talking about fashion. And then they can meet people who are also talking about fashion. So that's where we're headed. We are still in that middle of a pivot, if I can phrase it that way.
Okay, good. So what are the white spaces anybody would like to speculate here? I mean, maybe all three of you have been so involved in your own business, you haven't had a chance to lift your head up above the ground to really see what's going on. But would you like to speculate about the big opportunities that are yet unseen, or technology trends that are going to change and give larger opportunity in the social media space?
Yeah, I'm glad you explained white spaces. We're in a mixed crowd. We're the minority, but Robert. The white space, meaning it's like blue sky. There's a bunch of opportunity to go conquer, right? Is that there's new technology. Let's go create a new business and go after it and fill it. And it's like a blank space. So you look at the numbers. Someone here from Nokia and Sensio. We have people here from probably Qualcomm. I think they're the gold sponsor, right? Which is bandwidth. These things are growing phenomenally. Bandwidth, phones, video has also been hugely growing, as you're seeing. We talk about pictures and such, but video is the next thing. It's just not cracked yet. So if you take those three things and say, well, what can I do by combining those three things to come up with a product? Just think Google Glass. What are going to be the opportunities when people are walking around with video cameras on their heads, right? And the bandwidth is unlimited, as it will be. And they're going to be able to share videos. They're going to be able to work virtually. They're going to be able to telebank in person, remotely, in the sense that I could be sitting at my desk at home, looking around and virtually seeing my coworkers, on cameras. And as I turn my head, I mean, just the information about my environment, it paints a picture for them. They're just sharing if I want to be at an event. There's just a lot of opportunity that video, bandwidth, and I think cameras, remote devices like phones. I think that's going to just create a huge opportunity. Working remotely, I could be at my desk and say, okay, I want to order a pizza right now. But instead of going online and filling out a form, it's complicated, it takes a long time. I could see it much faster. I'm going to push a button. I'm going to be, seeing a video of somebody else who's a real person in whatever country, doing a system for me, ordering my pizza, and it shows up at my door. and I could then switch a channel, and now I'm banking. I switch a channel, now I'm working with my board at a board meeting, or my coworker who's in another country. So the video remote, and I can do it from my house, on the street, bus, on the metro. That convergence, I think, is going to be huge.
Any ideas?
So create Google Glass. Oh, wait, it's already been done.
So, Jason is exactly right. There's a book I would recommend you if you're interested in what he's talking about with Google Glass. There's a book called The Age of Context by Robert Scoble. I recommend everybody download it. It talks about that very thing. So we're full disclosure, we're early developers on Glass, and we do a video app for Glass. So
pizza.
couple of video apps actually. But context is going to change everything as much as mobile did. So often right now we're tied to our phones. We look down at our phones. We're sort of battered with information. Most of it's nonsense and nothing you need to use, but we're tied to it. But imagine being able to just be in an experience. And with Glass, I'm sitting here, if I'm wearing them, and I actually thought about bringing them tonight. I was like, no, this is about social. So in it, I would see up there that if my wife pings me, I would get the notification. If I wanted to talk to you in a different language, I could actually have it translate for me right in front of me. If I wanted to see what my next meeting is, and I'm walking along, it will appear there. But also all the other nonsense that maybe I get pinged for from games, none of that appears. The context matters. When I fly into San Francisco, up comes, if I'm in Palo Alto, restaurants around Palo Alto that will appear right in front of me. Around the evening time, I'm about to go for dinner, right? And so these types of things, activities happen and follow me. And so you will be in this experience where you will choose, you will dictate it. It will also change. Think how much screen real estate we used to have with our computers. And then the screen real estate we had was this big. And then the screen real estate will be just interruptible. So it's going to change what you do. I notice when I wear Glass, I'm interrupted much less. That's a very important thing. Have you ever watched teenagers socialize? Get four around a room, what are they doing? They're all sitting around together like this. They're not looking at each other, right? With Glass, I'm almost always looking at the person in front of me, even though I'm still connected to the world.
Totally boring them.
Right? Well, you glance up, you glance down, you glance up, you glance down. It's very different. And that little thing of not being defocused for 10 seconds, 15 seconds when I'm glancing down is all the difference in the world. And so I would recommend that we think about how different our technology will be when I know who you are, where you are, what you prefer, and the technology responds to you.
I was going to say the white space would be chiropractors because everyone is like this. But as Greg pointed out, now with Glass, their necks are upright, so don't invest in chiropractors.
Before we go any further, I do want to, by the way, thank somebody here, Debar Thacker, for really arranging and putting on this panel. Debar's right here. He's been instrumental in encouraging these gentlemen and myself to join the panel, so I just want to thank you. I think now it's probably time to open up to the audience. I'm sure some of you, I hope, have got lots of questions, and this panel, take it away.
I think all of you are mostly focused on social media to consumers. There's the other question of B2B stuff. And I think the most obvious thing that comes up is LinkedIn. Okay, that as one. Is there really anything else? And if there isn't, what business opportunity is there to get B2B communication, social media, profit making, and so on in that space?
Greg Sachs did a company called, spun out. He did Genie.com, which is a genealogy site. Yammer spun out of that. Yammer was a B2B version of Twitter, and it sold for Microsoft for like $1 billion or 400 million. It's the same thing. So 400 million. And so there's a lot of those that happen, and probably no one's heard of Yammer. Maybe in this room you have, but most people haven't heard of that company and that sale, which is a huge sale. So I think it's happening, and there's opportunity there. Especially because a lot of businesses block social media, which might change and then ruin your business model if they allow Twitter in, and they allow YouTube. One of my employees was working at another company, and they blocked YouTube, and he wanted to do instructional videos for employees on YouTube, and yet no one could watch them. So if he made it on a different service or made an internal B2B version, then people could do it. So maybe there's an opportunity, but you also got to be wary that the only reason it might be internal in B2B is because it's being blocked because of fear of spending and wasting time on social networks, which no one does. And then the company's realizing, wait, let's not spend money on it, let's just open it up and be free and use YouTube.
Well, there are confidentiality questions though too inside the business.
Right, but you can create private channels. But there's no confidentiality, just ask the NSA, right?
So how do you define social?
Well, I would put it this way, I mean, if you're selling to consumers,
Yes.
okay? What if you are selling to businesses?
But we are selling to businesses because we don't charge our consumers anything. We're charging Procter & Gamble, charging Google. So in a sense, it is a B2B that our visitors are social, but our advertisers are not social.
Yeah, what I mean is that to get people to come to and do social media for your plumber, for a management consultant,
Yeah.
for programmers, for whatever. In other words, what is the social mechanism so that you're mostly focused on selling business services and products to other businesses?
I think there's huge opportunity here. Let me give you a couple examples. One is Dropbox. So how many people, by show of hands, use Dropbox? Okay, Dropbox isn't a cloud storage service. It's a cloud exchange, or it's a file exchange service, private, right? And it works best because it's a network, because I can guarantee that people are on it, and I can safely and securely share it. And they baked in all these gamifications and social aspects into it, even though it's a boring, we would normally think it's really boring, right? But they gamified it, they socialized it, and that made all the difference in the world. And so I don't know if they intended that when they first started out. I think they were just trying to solve a particular problem with syncing at the time. It was, I have 5 devices, and how do I get all my files to the 5 devices? And that by itself wasn't interesting enough because it was easily reproducible by anybody. What was interesting was, what I could guarantee that if I wanted to send something to Jason or Rajiv, that I could privately share a PowerPoint deck with them, and they would get it no matter how big it was, and it would show up whatever device they were on. And so suddenly they enabled all kinds of private sharing that wasn't possible before. They made it transparent and easy. And so I think, again, about social, we were talking before, there are maybe a few destination sites that are social, but social should be part of everything that you bake into it. And think of this, again, a boring service like cloud storage and syncing suddenly becomes an exciting service to share. So if you can do that with yours, take the boring but necessary and add a social component that really is valuable, you can have explosive growth.
So here's one for Greg. Banking and mortgages, right? They're socializing. Probably not.
Well, maybe not. I mean,
Healthcare.
how about fitness? So I got a Fitbit. I mean, do you have a Fitbit or something like it? Okay. The only reason why this works well is because I compete with 8 other people virtually for the most number of steps.
I guess I can compete with my bank account.
But banking, even on the banking side, how many of you use Mint? So Mint is a site, but it would be much better if somehow I could, if there's a way to almost compete for savings, for example. How do you get the biggest savings? How do you get the biggest accounts? It doesn't mean something you have to know, but I think there's a possibility in a lot of businesses to add social. It's about understanding the value prop you're trying to do. All of us want to save. What's our incentive to save? What if you could put an aspect into it? What if I can compete with my family and my brother or my sister about how could save the most or get the most returns? There is a possibility of gamifying and adding social status to anything.
Yeah, I was giving Greg a hard time, but I agree.
Is there a question about having a social media that is an aggregation of other social media sites?
Yeah, they tried that.
The Facebook and the Instagram, and you're everywhere, Google Plus, and
Well, there's
you
Givit
get to create your own.
Givit, Janrain, type companies like that where they aggregate.
Opportunities there.
Yeah, and they sell data. There's a lot of opportunity in that, but when sometimes people pick networks because they don't want to cross the beams. You know, I don't know if you've seen Ghostbusters, but you don't want to cross the beams.
Well, I can think of an example where one of the associates who worked for us went and started a social media site essentially in the in the healthcare space aimed at, frankly, drug addiction and alcohol addiction. And it was an issue of sharing your information, your experiences of trying to get back on the straight and narrow. And this is enormous interest to the big insurance companies because, unfortunately, even people who go to Betty Ford's clinic who are alcoholics, unfortunately, they're only successful something like, I don't know, 40% of the time. It's some big number anyway of people where they fail. But this mechanism helps keep them by communicating with similar alcoholics in a social setting. Apparently, it has an enormous effect for keeping them on the straight and narrow.
Was it an aggregation of some folks on Facebook and some folks on Google Plus and all that, or was it its own social?
It was purely social outside of Facebook,
Outside.
because it has to be a kind of private network because all the information, has, which is all the HIPAA laws apply. You can't share it with the public at all. So it's really a private network in that case. Anyway,
I have a question. Talking about white space, what do you think is going to be the role of augmented reality in social?
I'm not allowed to talk about this topic.
There's already companies that are doing this. But again, it's not very different from what the Google Glass experience is. When you're going out there, you are seeing things on your Google Glass. So that is in a way augmented reality there. But augmented reality is just a feature of a lot of the social networks, I think, in the future. As you go ahead, especially if you're on the mobile phone, you will see augmented reality creeping into all of these social networks that exist today.
Yeah, I think there's a lot of opportunity there because there's money behind that augmented space that's legal and moral and ethical. I can talk about that. And that is shopping, architecture. There's a lot of B2B opportunities where you say, okay, don't come to my store and shop, right? Just online, put the clothing on, peruse through the gallery. There's that, but there's also hey, we're an architect, and we're going to let you walk through the building we designed. What do you think? Do you want to move the doors around? Do you want to do that? And by being able to do that on a $100 million facility, it's, we could take $1 million off of that one project. So there's a lot of opportunity, I think, in that space.
let me give 2 minutes to my friend back here who's got augmented reality on his iPhone. He can show you the demo. Tell them what you do.
Well, we built a virtual fashion augmented reality app. You can wear your clothes virtually on this mobile app, tablets, online. Be it jewelry, shoes, you can fit and you can redesign it and share it. We are targeting the age demographic of 18 to 35. That's where you see the huge user adoption, just like Snapchat. We added some fun features like where they can redesign and wear it, flip it, the whole pant here and shirt down, and share it with their friends and things like that. It's a fun experience. It has both the licensed play with the enterprise players, click per, revenue generation by click, and also it has a direct consumer presence where it posts for worldwide users. Yeah, thanks for bringing it up. Appreciate that.
And you could take your clothes off too, right?
Yeah,
Stay
we
clean.
have a 3D play and everything, and you can do all that fun stuff. That's where.
Yeah.
I'm not an IT guy, so I'm a lay person, and maybe I get impressed with Fred. But he showed me that, and basically he took a picture of me and started dressing me. He didn't unclothe me, but he started dressing me in different clothes, t-shirts and things like that. It's really neat. And even someone as ugly as me started looking nice in some of those.
What's the app? Can we get it now?
You have a very nice
You make
voice.
me look cool. We can get the app now. What's it called?
Yeah, no. It's we're trying to beta launch with some top brands right now. The development, the product is ready. It's in the app right now. We haven't released to customer base yet.
What's it called?
Simplify is the company name,
Simplify.
and the app functionality is going to be either fashionista or dress up.
Simplified.
I've got a question. I don't know what your guys' take is on Bitcoin, but I'd like to hear what the four of you think of Bitcoin. You guys are in the marketplace. You guys are seeing silly valuations, and that reminds you of 1999. I mean, a guy like me, I'm a young guy. I look at Bitcoin. It reminds me of .com IPOs from 10 years ago, 12, 13 years ago. what's your take on Bitcoin, and how is this a sustainable currency that is legitimate for the average folk to use? I mean, what's your take?
Just for those people who may not be familiar with Bitcoin, which is this algorithm substitute for money, as it were, that's outside the purview of the Federal Reserve and the comptroller of the currency. I think 1 week ago or something, or a little while ago, it was worth $70. It hit $660 today or something. It's been up and down because they're having a Senate hearing, and it dropped. Well, maybe it was over 1,000 briefly. And then apparently it's up again today because one of the regulators or lawyers in front of the Senate committee said, well, there's really nothing illegal about virtual currency. So it popped up again. So anyway,
politicians are thinking how to make it illegal. That's what to worry about. My brother works for the LA County District Attorney's Office as a high-tech crime investigator, and he works with the Department of Homeland Security. He went to Thailand and taught them about cyber crimes. He's one of the experts in the United States. And he's like, don't even get close to it. It's going to be illegal. It's very up and down. It's unstable. It's the people who trade in it are very shady. These kinds of things that I don't think it's going to get wide adoption before the regulators find a way to make it illegal. So I'd be very careful.
I have a slightly different opinion. Let me just be. So as long as there's crime, there's a need to launder money. So if anybody thinks crime's going away tomorrow, I would not invest in Bitcoin. But if you think that crime is going to be here to stay, and you need a way to hide your money, you're talking about 256-bit encryption. Even the NSA would have a problem with that, in order to manage to move the money around. The real thing, though, if you study money, we assign a value to currency that doesn't have intrinsic value based on the faith in that currency. So the reason why, if you pull out a $20 bill, you think it's worth $20 is because you have a faith that there is a certain amount of value associated with that piece of paper. The issue around Bitcoin is you have faith that currency is going to be an exchange of value for another currency. And there's lots of things where speculation hasn't worked. So I don't think the government will step in, but I think that people could lose faith in the currency, and if they lose faith in the currency, it will be worthless.
The exit strategy of doing a business around it is what I meant. That you might want to invest in it or use it as a currency or build your system on it, or maybe not build your system on it, but I don't think I wouldn't build a business around it.
Can I just ask, I mean, we're very US-centric in those comments. Mm-hmm. Could it be, I know faith, and I think that's a very good point, it has to have faith anywhere, but could there be other countries or regions where the dollar is not, and the US-centric nature is not necessarily the driver? I mean, software and apps and all that are heavy here, but there are other places also that are generating networks, social networks.
I met a guy who runs a Bitcoin company, and he's based outside the United States.
Yeah. And they have to say, your comment still applies globally? Or?
For us in this room, I know there's a lot of internationalism, but if we're talking about being an entrepreneur in the United States, I'd stay away from it.
But I think to your point is, again, if you believe that you need another exchange value that cannot be easily traced, that Bitcoin could be a choice for you to do that. I think it will be regulated in the United States, as Jason was saying, but there's a world outside the United States. And even within the United States, there might be an unregulated world, say drugs or others, where that is how you would actually use it as an exchange. I'm not advocating it, I'm just saying it's a reality.
Offshore equivalent.
Once it goes through Bitcoin, it's untraceable at this point. So but remember, a lot of times people are caught for tax evasion when they try to bring money back into the United States. They can get it off, they can make a multiplier, and they try to bring it back in, and that's where they get caught. So it's all about where you can spend that money.
Yep.
So, talk about retail and social networking for a second. You have a lot of retailers have sites, Facebook sites. They grow the number of Facebook fans and likes. There's an indirect correlation between driving traffic to your site, driving traffic to your stores. But have you seen examples where you have a direct correlation in conversion and revenue streams just by increasing your popularity, increasing your sentimental analysis?
You will see as you get bigger.
Basically, talking about monetization of likes, basically.
Right. I'm gonna talk around it a little bit, because I haven't done it directly and have experience with that, but as a platform, as an inventory, where CMOs and advertisers come to us and say, we want this campaign. Okay, what's the goal of this campaign? And we built this custom application for it. What's the goal of this campaign? We want likes. Like, oh, this guy has no idea what he's doing. That's the first thing that comes to my mind. Because anytime an advertiser says they're spending money to get likes, they forgot what their business is, which is selling clothes. No, you advertise because you want to sell clothes. You don't want to sell likes to a 50-year-old male if you're a 20-something female clothing line and that guy has no children or girlfriend that's 20 years is younger, right? So you can sell likes and have lots of likes, but if they don't have the audience, and that's what Greg can talk more about, if they're not the right audience, they're worthless. So I don't think it's a number of likes, it's who they are.
Right.
And advertisers don't understand that yet. So Greg will probably talk more exactly.
Most retailers do not know how to monetize their likes. I challenge you to tell me with one or two that do it successfully and on a repeated basis.
Correct.
So would that mean to bring in some kind of a recommendation engine like Amazon has or something, which is more, I like this product, which is more like a recommendation, or, like in the social media?
Yeah, to Jason's point, people think likes is the end-all be-all. It's not. Likes should be a reflection of your popularity, not something that you leverage to get somewhere. It should. So they're not managing that. They need to be managing their community.
Right.
And managing their community is understanding and segmenting and understanding what the community wants and then talking to them. Right. And social is just a way to do that.
So that's a nice way of saying building your brand awareness and having a purpose. But I'm talking about a direct mathematical correlation between increasing that and increasing your revenue. I haven't seen it.
I'm sure it exists. Someone's either found out that it's a very low correlation, maybe some companies found a very high correlation. I'm not an expert on that. I know there are companies that tried it. Social Chorus manages, it's a Northern California kind of media agency. They are able to say, okay, we've got 10 million likes. And what he said is sending it out to the 10 million people is much less effective than finding the 3,000 that are important. And in fact, sending it to all 10 million hurts the 3,000 you want to get to.
Right.
Yeah, it costs you money. You spoil that uniqueness that we're really targeting you because you liked us, not just anyone who clicked on it, but you are the right audience we're going after. And here's something special just for you. So I don't think there's one solution. I think there's a bunch of, hey, you need a lot, but then you need to target it, and how you get them, how much you're willing to spend to get certain ones versus get a lot, and then data mine those, because in the millions you might find 3,000.
I think even agencies are moving away from that model. We find that all the time, that they're not really looking for likes anymore. They're actually looking for conversion. They are looking to drive people to either the store or the service or the goods that they sell.
But it doesn't mean that it's not good to get likes. It just means what Greg's saying, they don't know how to manage them.
That's my main point.
Yeah.
There's no way to manage.
If you had 10 million likes, it's better than having 3,000. If you can find 3,001 in the 10 million.
Money in your pockets.
Yeah.
So just briefly, we spent money on Twitter, and they were telling me, great, you can get a whole bunch of followers with likes, right? And I'm like, no, okay, followers converts to downloads how? Because that's what I care about, right? I care about conversion. I'm like, well, look, you get all these people, and then magic happens, and then that will really, I'm like, so after spending some money, we pulled all our Twitter, just pulled it, because I was literally, I'm like looking them in the face going, I'm sitting right at the head of the advertising group, okay, so how do I get conversions again? No, they have no solution, which is why I also haven't bought any Twitter stock.
Twitter stopped its direct messaging, and Facebook changes that not every liked person or liked person gets your message. So you also got to be careful about the platform changing.
So social networking and social media, I mean, you know how the users think, or at least that's what you're trying to make, the next best thing for how the users sort of, how they act, what they want to see. How much do the people who make the devices whether it's a phone or it's now going to be the connected world, you know, the car people or the home automation type of, how much do they, you know, what's your impact going to be, or is there anybody reaching out to understand it from those experts that have sort of tapped into what makes every demographic, the millennials and the 50 pluses and all that, tick with what you serve?
Vincenzo is sitting behind you. He works for Nokia,
Yeah.
right? And his job is to do that, I'm guessing, right?
I was
So-
doing something else, didn't follow.
Well, I don't mean tonight.
How much do the device people, and forgive me,
See,
but
if
I
you're
think
glad-
most of
By the way, I'm not a device person. I take care of an app store that's actually social. So,
But that's the point.
that's
what
the
he's-
point.
So
Okay.
he's asking, are there people in the device world that are paying attention to the social?
Yeah, I think this is just a personal thought that we've not paid enough attention because I think that had we been kind of preloading any social networks early on from the beginning, there would have been obviously a huge amount of money you could have received in terms of equity for doing that and so on. I think I think that OEMs have been forced to do that basically for free, right? If you think about it, at some point, when Facebook became too big, you had to preload that. Yeah, I think it's just really hard for hardware manufacturers to just jump into the software bandwagon. It's just a total different set of competencies and mindset that you need. In fact, like the one question I have for you guys is, I've been here 5 years now in San Diego, and I find myself every time having to go to San Francisco and Silicon Valley, like every day I'm like, I should go there for meetings and so on. And so I'm possibly January I'm moving there. And how do you guys find it doing, for you, venture capital here and investing in social networking companies and apps and startups here in San Diego, and for you guys doing startup here, how do you guys feel about that? Do you guys feel the constant need to go up to the Bay Area? I heard you saying that. What few times, how does that work? I mean, San Diego is still a better place to do business that you're doing compared to like Europe, where I'm from, where it's much more difficult. There's much less venture
I
capital.
think it's work in Del Mar, then you're saying.
Well, I think I spent half my life in the Bay Area.
Okay.
Right, I think there's no way, it is the mecca for tech.
Well, I think my observation is until Snapchat, of course, came along, and I guess Tinder too, that's part of
Well, they're all
IAC.
from the Bay Area. They just moved down, right? All the investors
it's part of
are from there.
I can talk about that.
Snapchat's about the only one, but anyway, the point I was going to make is, other than going way back to GeoCities, which was an early, social media company, if you remember, those of you who still were born at that time and remember, it's quite a long time ago. It
Bought
seems.
by AOL, right?
Sorry?
Bought by America Online, or was it bought by Yahoo?
It was bought by Yahoo. And but what I was going to say, and answer your question, is I do think if you're in the Bay Area, you have a huge advantage, in the sense that there are no Facebooks down here, there are no Twitters down here, there've been very few. There's no LinkedIn's, there's no PayPal's. There are very few very big winners, frankly, in any of these social software networking companies. And I think the advantage is there's just a critical mass of engineers up here who are literally getting together in an informal way in each other's homes, in the hot tub, who knows what, and they're exploring ideas and saying, here's an empty space, we should go after it. This is the next big thing. I don't think there's enough critical mass, in my opinion, here in San Diego for too many ideas of that kind to come up with. I mean, bless his heart, this guy is one of the most innovative guys I've come across, a great engineer, but he was 5 months too late with respect to YouTube. They were 5 months ahead of him. And that tends to be, I'm trying to answer your question, that tends to be the case. I think, more stable and business models are related to handsets and Qualcomm and so on, plenty of opportunities here. But in the social media space, my bias would be, it's very difficult to imagine that you're going to find a company that has an edge over one that's probably already thinking about it in the Bay Area. So, find that 5 months ahead.
He's got the camera.
I still haven't got my answer on my question of devices got turned into Silicon Valley, which TiE is here because we want this place to have a say as well. I mean, you guys are evidence, you're all San Diego. The question I want to come back to is iPhone and Samsung. Samsung is pushing, and soon Apple will, wearables, and you commented on context aware. I mean, that doesn't require
Right.
Silicon Valley,
I
maybe.
saw someone with a Samsung R&D backpack, and he's got some great wearables in there that I found. But anyway, getting back, MySpace was a Southern California social network, and we succeeded, and I'm going to tie these two together, so watch this.
Yep. I'm zooming.
MySpace succeeded.
Turn off the camera if you don't.
No, I'm zooming on it.
MySpace succeeded because what we did was we went after the entertainment industry as our partners. We leveraged their audiences to grow. Music, film, television. It was something that Friendster couldn't do up in the northern California. They were great at engineers, but yet we were still able to keep our site running faster and better than them, and we did it in Southern California in 2003, which was 10 years ago. The landscape has completely changed. During that time, one of our partners, I wish I could remember the name of this phone, but it was a device, and they said, okay, we're going to launch this device basically off the MySpace network when MySpace was huge. And they were an LA company building the device,
Yeah.
and I wish I could remember the name of the phone. It was Sky Dayton, I think, or Sky Dalton. He did another company that was really big.
Ex-Qualcomm guy who did Korea connections to it.
So they tried to launch the phone, and just the audience didn't want the device, and the device wasn't ready, and it's too ahead. It's hard to marry the two different worlds of hardware and social networking timing-wise, that the device has the features that the social network is coming up with next.
I think it's on that question. I mean, you look at Apple has been a company that failed a number of times. Remember the Newton? Came out with the hardware. It really was, in a sense, an early social device trying to communicate.
They did Ping as well, social network
Ping.
on iTunes Store failed.
Nope.
There are very few hardware companies. Apple's been one of the few. I read as recently, Samsung, I read two reports now. One says they only sold 60,000, which is a dismal failure of these watches, Samsung. Then they had a correction in this report I read today saying, well, no, it's not 50,000, it's actually 800,000, which isn't bad, apparently. I don't know, I think it's very difficult for a hardware company because you have to remember also that the people who are trying to provide these software solutions, they wanted to cross all devices. They wanted to cross every hardware handset manufacturer. The handset guys want to keep it just to themselves. And Apple was clever enough and able enough to do that. What has, of course, disrupted Apple is Google, which has provided a software solution across multiple hardware devices. And, it's sort of ironic to me. I mean, essentially Apple is becoming the Mac to the IBM PC, if you remember years ago. Apple is the high end, and Google is the low end.
Yeah.
But it's cleaning up in terms of numbers and penetration.
What is the primary input method for Google Glass?
The primary input?
Is
Voice.
How does it function on voice or?
Voice and gestures.
Yes. So there's two, and the voice is a very good way to control it. Unfortunately, if you were sitting in this audience and you were sitting over there and wearing glass, you wouldn't want to start talking when people are talking. So you also have touch, and they have a series of touch gestures that allow you to control it. The UI is extremely simple. Think of it as cards in space that you move around. You either move across or into the cards. So it's very, very straightforward, very simple UI. And it leverages the cloud for most of the services. So simple UI, cloud services.
But it's changing. That was the first prototype version. I understood that they're coming out with something new.
Yes, I have the new glass.
The thing though is they'll continue to make the UI very simple. You don't want to learn 12 different hand gestures in order to control something on your face. You'll look very strange. But you also there would be a lot to learn. There's already enough you have to sort of visualize in space, right? For example, if you can't remember sort of where things are in space, you're gonna have great difficulty using glass. So I think, but again, I'm a big fan.
So you guys made two comments, and I want to clarify. So I'll ask you two questions. They're unrelated. First one is, you said you need a lot of capital to start a social media company. Is that true even with AWS, Azure, whatever platform you use? To have 500,000 or 1 million users, I would think that shouldn't require that much capital. So I'd like to see what your thoughts are on that. And the second one is, you said even the social media companies are so successful, even they don't know what magic happens that certainly gets them to go off, in a hyper-growth mode. Is that something you just have to learn by experiment, or did you guys come up with or did you guys come up with some methodology to do some sort of market research, social research to say, if we put these three things together, people will react to it?
Well, you look at the feature set for Google Plus and for Facebook. They're so similar, and yet Facebook is significantly more, adaptable and more successful. In fact, they keep having to shove Google Plus down our throats by tagging it to Gmail and to YouTube recently and others like that. Like, you must take our service, right? Nobody else has to do that. Nobody has to lure you into using Facebook. And I would argue that Google Plus is more elegant and it's gorgeous and really well thought out. Doesn't matter. There was something about Facebook that drew people in. Something about Snapchat. Snapchat was not the first sort of service to make it easy to share photos, even privately. But they made it the best.
I'll make a comment about the capital needs. I mean, I think this business, social media is a very easy business to get into, to get started in, because the capital needs, the server is pretty darn cheap, you use the cloud anyway. Implementation, writing software is not that, a couple of programmers or what have you. But the question is, you need ultimately, whoever your investor is, normally likes to see you making money at the end of the day. So you've got to, at one point in time, have business models by which you monetize it and make a profit. And that's where a lot of money comes in very often, because you can get to a certain number of millions of users a month, but it's still not enough, as Jason was saying, because CPMs have come down so dramatically in the last few years. Very difficult to make serious money with even 10 million unique visitors a month. So what are you going to do? You've got this horrible decision to make. Is the business going to work? Do you keep on pouring money into marketing now in order to generate this up? But you've got to pay the cost of marketing. Is it going to be sustained? Is the level of users going to drop off? But you've got to keep on putting the marketing thing in to get new people in the door. Some sort of, not exactly a Ponzi scheme, but it's a thing that can fall off very quickly. So you either have to pivot and find an adjustment to the business model, or you really got something that catches. And that's when you can get the money. The money's easily available if it really catches. And I have colleagues of mine who invested in Twitter, and it wasn't making any money, and no revenues actually at all. But they invested because they'd done enough due diligence to understand that the drop-off rate was very low, and all the growth was all new users, and it was being sustained. And they took the bet, as it turns out to be correct, that this was a lasting, sustaining model that could ultimately be monetized. But it's a very high-risk proposition, this, and in each category, even though we talk about niches, they're quite large niches, these social media, and there's usually only one winner. I mean, I think even in the music category, even though we said there may be 3 or 4, I suspect to actually find sustaining profitability at the end of the day, it's probably going to come down to, my bet is a couple that will be actually make money. It's what Greg said earlier, it's a shitty business because you've got to pay all these, you've got a huge cost of goods, which people don't realize. It doesn't increase, the margins don't increase by volume. It's still this slither of gross margin you get, even on the nth millionth song. It's not like normal businesses. Most people don't realize that.
Universal Music is not giving large discounts.
So you're right that that entry.
Okay. It's a follow-up question on. Oh, sorry.
Yeah, go ahead.
So the revenue model you were talking about, I would say that the old phone that we used was a social media thing. We were able to talk to anybody, we could dial, we could connect. You were charged by the minute. Nobody had a problem with that. if we had these messages exchanged and photographs exchanged and videos exchanged, we could have some micro payment. Anybody has ever thought of these kinds of things?
The thing though is you're competing with everybody else who's giving away for free. How are you going to do that? How are you going to charge for something that everybody
What would
else?
happen if Facebook
Is there a
charged?
premium thing that you get, like a premium thing
Plus
with
feature.
travel app, which kinds of getting more and more into the world, say that, okay, now you got to pay for all these things and that because there's value to for you to share it to somebody.
I don't think I've ever seen that work.
Well, I think it's already commoditized at that level.
I think you're right in that micropayments work, and if you look at Korea, that's how they make all their money. They don't advertise, they buy little tchotchkes to decorate their profiles, and tchotchkes, is that Indian? I don't know. Yiddish.
You have to be East Coast.
So you can translate for me, like class. But, so it's not charging per minute, is what I think Greg was answering. Is I don't think that's ever an answer. But there are micropayment options, like featuring. I think Rajiv found a great way to do that.
Question? Yeah, just stepping back, if you've not yet reached the sort of the need to scale, any thoughts on, how do you sort of get the early adopters? How do you get the early users for a social app?
You come and stand up in a conference like this and say, my app does
Is the best.
So I can tell you that
my app is the best.
So there was you heard the story about Pinterest. So I heard the CEO of Pinterest speak, and so one thing you should know: the first year of Pinterest was a total disaster. Disaster. Okay. So he was he was an ex-Google guy. He left to start Pinterest, and in the first year, he had 10,000 users. Now he says that 10,000 was an exaggeration. He really only had 1,000 active users, and what kept him going was shame. He was too ashamed to return back to Google. It wasn't like I'm excited and motivated. He was too ashamed, right? But along the way, of the 1,000 users, there was a particular niche, and they were people that were really into design. And he found that that was their loyal niche. That was the thing where there was a value proposition to designers that was not available anywhere else. If you go to Facebook, it's not design oriented at all, right? It didn't service that. So he started talking with those because hey, there's only 1,000 of them. So he started talking with them and started to exchange with them and learn what they wanted. And from that design group, that niche, he built Pinterest. And as soon as he was satisfying that, it turns out other people like design, even if they're not designers. And so, and it was also targeted mostly towards women at the beginning, and there wasn't a social network that was really oriented towards women. There's a lot towards guys, but not a lot towards women. And so, you can be a guy on Pinterest, it's okay, but it is okay, I'm on Pinterest, and I'm a guy. But it's a you have to like a certain aesthetic, but he listened very carefully. He interacted with his community, and he no longer was ashamed. He was proud. Right?
The key to what he did wasn't just finding designers. One of the really early persons was the wife of Abercrombie Fitch. Right?
That helped too.
So when the wife of Abercrombie Fitch starts saying, "Hey, designers, let's look at this," and start sharing it with that community. So it's really a great question, is go after influencers that are worth, those 3,000 are worth more than the 10 million. Find, and that's what Zuckerberg did if you watch the movie, and that's totally factual. You start by going after one group of people and slowly expand it and make sure that those are influencers. So I think there's a lot of value. Don't overestimate or underestimate the power of early adopter influencers and limiting your market test group to them. Listen to them, feed off of them. Really, really important. Great question.
Let's take a couple of more questions, maybe these two.
Just a question, I mean, I guess the basic premise of social network is sharing. And so what does the panel think about the trends they're seeing? What are the limits of sharing? Where will we draw the line? And then somebody mentioned antisocial. I mean, is there an antisocial movement starting out of this, a network for the antisocials that says, this has gone over the limit?
No one will hear about them anyway.
They're not going to share.
Can I answer that one for you? I've been following social networks for about 10 years now.
Yeah.
And now the trend is to get away from the social networks and actually live.
Yeah.
Because the last 5 years or so, people have lived on Facebook. Life has passed them by, and they've suddenly realized that, oops, we were just over here waiting to look at what other people were doing.
Right.
And they never got to do anything. So
There'll
now
always be
there's a
new-
pushback.
As P.T. Barnum said, there'll always be new suckers, and they're called 13-year-olds.
No.
That's why Snapchat,
Yeah, don't
Instagram, it's all about sharing inappropriate, upskirt. Oops. And there is a Pinterest for guys, it's called ESPN.
So, but you have to ask yourself, why did people share in the first place?
Yeah.
Right? What was the value of sharing? And if you've modeled this for the last 10 years, there's different behaviors, but it falls into certain buckets. There's a person who's altruistic, there's a person, and you can have multiple roles, but you can be altruistic, you can be often about status. Like if you look at people on Facebook, they're always having such a great time. They're always going to the best places, the best restaurants,
Right.
they're the coolest clubs. These people are so exciting, and you're clearly not.
I'm in like McDonald's.
So they share because they're trying to show off, right? So whatever it is, and why are they trying to show off? They're trying to gain status. And so if you believe that, then it's the social network is a lot about gaining status and connecting. As we get older, we care less about status. We care more about connection, but we forget that that's why we get it in the first place. So those habits are built in. So you have to really look at the value of social networking, not social networking the instrument.
So where's the limit? Where do you think, and I mean, will we share everything? Because right now we think about privacy, we worry about all those issues, but then on Facebook, we'll tell people, we're leaving home right now, here's my home address, whatever, we'll share everything. But we are worried about privacy, so where's the limit?
Well, the very first thing that somebody asked me when we started our service, we had a street team of college students who helped out. It was a mix of male and female. And the females asked for almost immediately, can I block somebody?
Block somebody, yeah.
Can I block somebody, and can I have a private profile? Those are the things they asked for right away. And so what they're saying, within this social network, they wanted to limit. They wanted boundaries. They wanted to make sure their mom couldn't see them on the site. Whatever it was, they didn't want to be a place where they could be followed unless they were in control. So yes, there are limits, and this new generation, I think, is learning the limits of what they want. I think it's like going to a club. So we can all remember, some of you are still young enough to go to clubs, and most of us are out of that space. We went to clubs because they were exclusive. We didn't go to a club because everybody could get in. We went to a club because we could get in. And I think when you look at the limits there, they want to be part of exclusive experiences.
But I think that actually our company here, Rocketalk, is really aiming at that in a sense, because you've got the choices of private networks or sharing publicly. If you want to invite followers and friends, you have that option too, but you don't necessarily. So you can be as private as you like, but you can also view other people. Your information is private, but you can see interests that you have. You may not wish to share anything of your own with that particular interest group, but you might. And if you do, you might share it just privately with a group of people, or you might decide to do it publicly. So I think, we're sort of, there is, for most people, there's a desire, if it's only, look at everyday old behavior, I mean, reading magazines of some interest or other, we do like to stretch out and see what other people are doing in an area that fascinates us. And it's a big step to sort of share everything with the whole world around that interest, which is where we've gone, but I think the pendulum could swing back.
Anonymous sharing also,
Yes.
I think Twitter is really good at that, SodaHead does that, take advantage. So the opportunity not of the anti-share, but the anonymous share. So I can say,
Yeah.
look at this really cool article, I think everyone should know this before voting in the election or investing in this company, but I don't want to reveal the fact that you're my coworker because I might lose my job. So.
One last question.
Sure.
Thank you.
This question is with regards to personalization and verticalization of social media and social networking sites going forward. I treat Facebook and LinkedIn as old school boys. I can't get the social graph with 1,000 likes and 1,000 shares in a beautiful big data dashboard. Don't exactly tell me the true picture of what Jason would love to wear, love to eat, love to have fun with. The interest graph phenomenon that's evolving, such as Pinterest and fat.coms and things like that. You have a personalized consumer insights that I can get so that my next targeted ad is going to be more effective from a transaction perspective. What's your viewpoint on that front? Whether these old school boys are losing the game and the new school kids with the verticalization phenomenon will rise?
I think it's going to be both. I don't think in the near term you're going to see one completely losing out and the next completely winning. Like for example, we are in the interest graph business. We are mapping out interests of people, and based on interest, people go do certain things. Whether they do inappropriate things on one end of the spectrum or very esoteric things on the other side where they are exchanging poetry, for example. So interest is being mined, but that is still not a true picture because those are things that you do in certain parts of your day. Other parts of your day, you might be on Facebook. You might be just sharing a picture with your family or with your close buddies. You're just having fun there. So fun might be different. Interest might be different. So they will converge at some point, but I don't think they'll be the same company doing both.
So there is no personalization at the core, at the origin of a consumer when he says it.
Big data is really important. When you say Facebook's old school, I feel like a grandpa at MySpace. But big data is really important, and it's not. I mean, that's the leverage. One of the two levers that Greg talked about that was so good about the Facebook network is the data and the targeting and the ABN testing. So big data is huge. I was at a big data conference, and they're talking about one of the credit card companies let them tap into sample sizes of their data to figure out eating patterns and credit card usage to see if they can make restaurant recommendations. Right? There's endless possibilities if you start thinking about, wow, if we could tap into, well, he used his card at this location for this meal, and he was tweeting the fact that he was with these people, and the data could create content discovery, security. So imagine if you're going to spend money on your credit card and you're trying to do anti-fraud, and you're like, well, there's no possible way the guy could be over there because he just checked in Foursquare over there, right? So connecting all this data, that's another one of the white spaces I think that would be interesting to go after.
Correlation.
Well, I'd like to thank the panel for an excellent discussion. We also have videotaped this discussion, so maybe in about 3 or 4 weeks' time, you'll be able to go into our website, and if you or your friends want to listen to this discussion a second time, you'll be able to do that. I have some small gifts for our panel, and again, thank you so much.
People, talking to them, that in less than 10 years, MySpace existed, and now look at what LA is with its technology. And the same thing can happen here by making events like this. You won't believe how quickly you can have it by having events like this. It's really important.
So there.
Thanks.
Thank you.
Now I know.